Good evening, everyone. Welcome back to the channel. So, in this video, we're going to do another in-depth analysis of ULTY because I want to level set. I want to make sure that people's expectations on these funds are not like through the clouds, but more reasonable. But first, I want to discuss NAV erosion for a second because I actually watched another video that was a little surprising to me today. Um, so, what I want to say, NAV erosion is something that we use the term nav erosion, but it doesn't necessarily define what people always think it's defining. Um, Basically, we're referring to share price decline. So, whatever word or buzz term you want to use for that, everybody kind of speaks their own language, it seems like, even though, most of us speak English, people kind of speak their own language. So, NAV erosion refers to share price decline. My firm belief is that, if a fund is performing well and if it's not paying too high of a yield, it should have what I would refer to as a stable NAV. So it's true that no such fund, there is no fund that doesn't experience NAV decline in terms of like the fund's net asset value on a day-to-day basis, even S&P funds, even index funds, even leveraged funds. Um, there's no fun. So if I've given the impression that I've suggested that there's no NAV erosion, I'm not purely referencing like NAV as in terms of net asset value. I'm referencing the idea that I like funds that don't decline overall. I'm a big fan of total return. I'm a big fan of total return on your investment, including dividends and uh, appreciation, price appreciation, actual price appreciation in the funds, which is something that we don't talk a lot about, but that's something that, of course, growth investors are very keenly aware of actual price appreciation of the funds. Anyway, we got a couple of people on. Welcome. Hey, pay the piper. Yeah, I'm starting to see the light, but we just ran into a buzzsaw with the market Friday. Um, Papa Powell kind of threw us a little curveball, but no, I am. And margin is something, like I say, by no means am I an expert, so margin is something that I'm able to actually drop that line about not being an expert because I'm by no means an expert. For the longest time, I wasn't using it, and I would have to say I'm kind of following in the footsteps of what I mock, I guess. I was not really doing it because I was kind of afraid of it. You're saying Interactive Brokers has the lowest margin. I was not doing margin, and the thing is, because we're talking about Ulti, margin can really accelerate your returns with Ulti. We showed that in our last video. Let me jump to that spreadsheet real quick because I know you all are chomping at the bit to get Ulti analysis here. So while I'm on my side rant about margin, let me at least include some Ulti numbers to satiate the cravings of you all here. First make sure that technology is working properly. Yes. It's weird. I can turn like my screen back to my other window and then when I'm on YouTube live it works, but if I go away from it, it's like it plays tricks on me. It'll be a black screen. But anyway, as you all will see here, I'll let you all ruminate over these numbers while I'm on my side rant about margin. Um, yes, you can accelerate your gains, but I probably need to have what I call a coach to coach session on margin because in my accounts, it says I have some margin exposure. In fact, Friday, it actually asked me again to deposit a little bit more, I guess, because I have everything pretty much maxed out. But I don't see like when other YouTubers are showing their accounts and stuff like that, I don't see that like, hey, I have 500,000 in my money and 500,000 in margin. So I think I'm not using that much, but it's kind of confusing. So, all right, folks, in a purely bull market, let me make this nice and big so the old folks at home can see. It's my running joke. I don't really mean that. I don't actually, so I would say this when I'm in a joking mindset, I don't mean everything I say when I'm joking, but when I'm serious, I do mean everything I say. The only problem is it's hard sometimes to distinguish between when I'm serious and when I'm joking. So that's the conundrum. So pay the piper. Can you coach the coach here? Can you explain to me how you get 6 to 1 margin buying power? Thomas Cho. Oh, he says hello. He wants me to say hello back. Okay, just since you were persistent, and I'm a big fan of persistence, I will say hello back. So there you go. Um, okay, so with Ulti, with margin, when the market keeps going up, it makes it really easy for us to double our gains. But we've got people like Pay the Piper on here who's saying you can 6 to 1. So I'm hoping that he comments away how this is possible because I want to know. I'm sure, like I say, it's hidden in plain sight. It's something that you all say, oh, coach doesn't know that. But I'm very eager to know because I'm not going all in margin just yet, but I'm dabbling. Don't knock it till you try it. See, here's the thing. I was knocking it before I truly tried it. So I was kind of going against my own advice. I can't fully knock it until I fully try it. How is that? Okay, so you're talking about portfolio margin. So presumably, I presume you're playing a bit of a semantic game here because what you're saying, because I know you like to trade options on leveraged ETFs. Um, I actually consider you one of my mentors in that regard. Um, but I'm assuming you're counting like the leverage you get from that and then the leverage from margin to get a full 6 to 1. Am I right? Am I right or am I right? All right. So with ULTY, I went over this example where if you had $1 million, you would get this many shares. And I ignored the recent past, where it used to trade at like $20 a share. That was, I know a lot of you all don't care about that. I know, it's like 627 now, or actually lower. We'll get into that. Um, but when you go from 20, I will say this, when you go from 20 to 6, there's quite a bit of whatever you want to call it, fill in the blank, but basically we're referring to NAV erosion. Whatever you want to call it, knock yourself out. But we can agree when a fund goes from 20 to $6, something happened there. And if it keeps on that path, it may go closer to zero. Who knows? I'm just saying, don't shoot the messenger, as they say. But this is where it's tricky for me. I truly am conflicted as an investor because I care about total return. And so I am, in a lot of ways, I am a growth investor who happens to invest in high yield funds. But I've just, in terms of total return, I've never seen one fully outperform. But it's great because I know a lot of us are just looking for that yield. So that's fine. I have them too. But I'm just understand I'm conflicted because I'm a critical thinker and I look at these in a very critical way because I do want that best overall total return. But where I am and where a lot of you all are starting at, I'm not saying to match like where I am investing because I'm an experienced investor. I'm just trying to help people make passive income. And dividends and options are two great ways to do it. Hence the channel theme. Okay, so March 13th, we went weekly. It's funny because I was reading a comment on one of my other videos. Um, and they said, "Oh, you didn't say anything about like a secret strategy." Well, I implied basically that the strategy changed because they went to weekly and the NAV seemed to stabilize or whatever you want to call it. I use NAV because that's what most of you understand. But I've had the formal education in finance too, so I know what NAV stands for, net asset value. I know there's no funds that actually have no NAV decline. But I like funds that either appreciate in value or stay flat while paying a decent dividend at the same time. Like I've told Jay many times, I'm like, you know what? If you paid, and they're starting to do that actually. If you have a fund with a more stable NAV, I'm saying NAV again, whatever you want to call it. Remember when I interviewed Mike, he called it something about like beta compounding or something that I think even less people would understand. Um, but I said, if you had like say a 20 or 30% dividend payout with a more stable fund price, there we go. We're talking about actual fund price. I think that would be great. Like, so before Yield Max, the top funds, you had QYLD paying 14%. You had the JEP Qs and you had one of my favorites was SVOL, but SVOL's actually gone down. So he says 200K capital gets you 1.2. See, I don't understand this, what you're telling me. But there's hope for me because you got me on board with the leveraged ETF selling puts and stuff. So there's hope for me. But I can't wrap my mind around how I can 6x. This is probably where maybe this is my Achilles heel as an investor. But if it is, I could fix it. Achilles couldn't fix his heel, but coach can fix his lack of knowledge on something, right? So that's the difference. But help me to understand that because 200K versus 1.2 million in buying power, I'm saying sign me up like right now, like ASAP. I'm saying like in this video right now and go sign up. So help me to understand that because I'm seeing what you're saying. I know you're really good at what you do, but I'm just not a believer yet. So you got to make me a believer. The brokerage gives you 1 million in buying power. Well, why can't they just give me 1 million and I walk away and we call it a day? I'm kidding. You all know I don't really think that way. But is that like every broker? I just truly I'm not an expert on margin, so I truly don't understand. I see very impressive videos on margin, and I know margin gets a lot of clicks. So, by the way, I would appreciate it if Celsius would sponsor me because I'm drinking one of your energy drinks live on air. I need an energy boost to deal with all this flack I get in the comments here. All right, so where was I? All right, so as far as Ulti, the past couple months, so we were joking why Ulti no go up, but we actually started joking why Ulti no go down. And of course, not that we want Ulti to go down, but Friday was a rough one for us. So what I want us to consider is Ulti's strategy sustainable? And by the way, another interesting tidbit, Curve is coming out with their own competitor fund for Ulti. They're in like the SEC blackout period right now, so we won't find out a whole lot. But you'll notice this. Okay, let me swear. Quick tech check. Perfect. This is working like a charm. All right. So our little nav argument. Dare I say nav? Nav can be a dirty word or a clean word, however you see it. Um, but anyway, so you see, we were flat here. So we've been above $6 in Ulti since May 9th. And we haven't dropped. So yeah, we've stayed above $6. We're flirting with dropping below $6, depending on how the market. It looks like the market might rebound Monday and the after hours and the post market. We're up a whole 3 cents, which is a whole 0.5%. You like that whole half? That's what they call an oxymoron. Not that the person that says it is a moron, but it's actually the figure of speech is called an oxymoron. True story. All right, so since July 1st, we've stayed above $6 and we've gone up to 644. We dropped here. This was probably, well, see, the thing with the weeklies, they're not having as much of an impact on, dare I say, NAV. I'll just say share price because they're weekly, they're not those huge chunks that are coming out of it. Um, so here, yeah, we dropped to like 617 and then we got down to 614. And then the last week was rough, actually. So watch this. We were fine like Monday, and then we started dropping. We had, of course, the weekly dividend payout, but then we really started dropping. So we lost like 4.38% in terms of price return. I know a lot of us don't care about that as long as our dividends are fine. Um, So we did drop August 1st, Friday, in the early hours, we dropped below $6. That's like what do they call that? Because May, June, July, August, we're at like almost we're above a 90-day trend. So that's almost what you could call a signal of like a trend reversal. As far as charting, let me do total return because I know that's what we care about. And I always show this. I always show, hey, the total return on these funds, it's not so bad. I look at myself as in the middle. You've got hardcore dividend, high yield dividend people that they get pissed off when you point out a fund is down 90%. They're like, "How dare you point that out?" And I'm like, "Okay, like if you want to lose 90%, I'm not going to get in your way. Like I don't want to piss anybody off." But and then you got people on the hardcore growth end that are like, Why would you even cover these?" So I'm in the middle. I call myself the coach. I offer coaching, and I want to be a tough coach to all of you all. I want you all to do the best you can. So I try to be as objective as I can. I'm not going to be a cheerleader for these funds. I hold these funds. I think the team is great. I think they're very transparent. I think Jay's like one of the coolest people. I think they all know what they're doing. And I think long term, I think the strategy is revolutionary. And I think that we're going to see that it does pay off long term. But I'm not going to sit here and just say everything is always great. I'm going to be critical. So I hope that's what you all signed up for that watch me. Um, so in terms of total return, so over the last year, we're up 27%. We're actually beating the S&P in terms of total return for the last year. And we're still beating the S&P over the last month. But what happens now, we're down like twice the S&P because of the downside of the market. And this is a bit, we had a kind of a perfect storm of things happen. We had the dividend paid out, and then we had the market drop. So let's review the holdings again, and we'll look at some of the trades too. So Reddit now is showing up as one of the top holdings. Upstart, Strategy, Nebius, New Scale, AppLovin, Coinbase, Vertiv. Vertiv is a great stock. I just heard Charles Payne talking about it. So if I hear someone in the media talking about a stock, I know it has to be a great stock, right? Kidding, of course, but I know, I know about the stock, so I know it's great actually. All right, so let's see what he said here. Presumably, he gave me his dissertation about margin and all of that. Oh no, he gave me like a sentence. You could buy 1 million in Ulti with 200K capital. It's also 15% maintenance. Hmm. So I know Interactive is the cheapest. I know Robinhood's like the second cheapest. I know Schwab is not the cheapest. I've actually heard other YouTubers that say that they don't like Schwab because the margin maintenance is too high. Which that's not I'm not a huge fan of Schwab, but I would say that's not the top reason to not like a broker. Most of my wealth is in Bitcoin, spot Bitcoin. Really? Did you do a home equity loan too? Because I had at least one commenter today say that they did a home equity loan to buy Yield Max, which I'm not going to say that's the brightest idea, but if that's what you want to do, you do you. Again, I don't tell people what to do on this channel. I just think that's kind of risky, but I'm a risk taker myself, just in more, I guess, manageable ways. I use collateralized BTC loans to buy high yield funds. I roll the loans and never go above 10% LTV. That means loan to value. It's working for me, so low margin. That's an interesting take on it. And I see your name's Base Layer Capital. Do you have a channel too? If you do, I'll have to check it out sometime. One thing I would say, it's getting harder to follow other channels because I've noticed since the New York trip, like since I've come back, oh, by the way, let me do a shameless plug here for likes. So I see 32 of you on. If you all could please remember to smash the like button with two thumbs. That really helps the algorithm out. Um, 32 people on, 4 likes. That's like 1/8, right? So we gotta boost the likes up. Okay, so what I was saying, it's hard for me actually to follow. There's so many channels. Literally, there's like a new YieldMax channel every day. And my hat's off to Jay for as many channels as he goes on, but I'm kind of hoping that Jay, because he's got limited time. He's a human being like the rest of us, but um, like every channel now is like covering yield max. There's like all kinds of there's like I see the dividend dad, the dividend uncle, the dividend cousin, uh, the dividend dude, the dividend gal, the dividend lass. Like everybody, there's like hundreds of channels, and it's just going to get like I thought it was already a saturated niche, but it's getting like super saturated now. So, and some creators that come in are like really good. Sometimes like I get like, man, like I need to step up my game. BTC 10 to 15% LTC. Litecoin is down. I got into some Litecoin, but I'm actually down in it. I guess I missed my window to sell it. Shows I have room for improvement, right? Well, once I get Celsius to sponsor me, it won't matter. He says buy more Bitcoin. He says no. What are you saying no to? I never take no for an answer. You know that. All right, let's go to the YieldMax site. We're going to look at some trades because there is some concern here about Ulti. I'm not thinking that at all we're going to get into a bear market. If you want my honest opinion on what's going on, I'll give you my honest, unfiltered opinion. Um, I think that we're in a great macroeconomic situation right now. Yeah, we have a high debt, um, but the fact that we've extended tax cuts and all of that, I think is great for business. I think inflation's coming down. We're not really seeing it in the retail side; it's very stubborn. But I think that the impact of the tax cuts on business, I think inflation coming down or starting to. And remember, what shows up in the wholesale realm, a lot of times it takes a long time to translate to retail. Just look at eggs. Eggs, if you go to the wholesale price of eggs, let me make sure I'm still getting on a rant here. Um, if you actually, I'd rather leave that screen up. So when I'm on a rant, if I have a chart in the background, it at least makes me look smarter. So I'm gonna just leave that up for now. Um, because I had LASIK, so I don't wear glasses anymore. So I need other optical illusions to make me look smart. Especially since I don't understand margin. Piper says you get 1.2 million to do with whatever you want. Oh, perfect. So I can go to the strip club. I can blow it on booze and hookers and all of that. I'm kidding, of course. But he said whatever I want. All right, so where was I? So in terms of macroeconomics, so let me do this because this is important. This is an important part of the video. It's not all just, pie and roses and peaches and roses and high dividends. We have to understand, we get the what, but we have to understand the why. So I'm gonna actually go over to Forex Factory real quick here. Derek Wade, let's see, what controversy is Derek Wade wading into here by commenting, giving up long-term upside for dividends is just a trade. If you get your initial investment back in cash flow to invest in long-term stocks, then you are winning. I totally get that, man, but I'm just telling you, I have a real life case study of that with Tesla. Maybe, and I know you'll probably tell me that's not the best case, but I was one of the early investors in Tesla and I'm down 50%. And right now in a record bull market, I'm just saying, I'm not trying to be a hater. I'm just being devil's advocate here, but I'm just saying in a record bull market, I'm still not ahead. I might be if the dividend continues, but the real um the real backbreaker for me was in November when Tesla stock shot up to all-time highs. And we did see a comeback in Tesla, but we didn't get all the way there. So I know Tesla might not be the best example. Misty and Ulti are the great ones, but I'm just saying, I've heard that argument a lot, but I have a real world case study going, and I'm going to hold it because I'm going to do videos about that. I'm going to hold it. I'm not going to sell it. I'm in this. I'm in this for good. Um, but I'll let you know. I'll let you know when I do break even on it. But I'm not there yet. All right, so let me go over here. So we want to get into some macroeconomics. So I was talking about, all right, so the tax cuts are a good. That's a win for the economy. The unemployment numbers are a little concerning in the fact that they revised them down. Um, but you've got a Fed chairman, you've got Powell right now that like refuses to cut rates, and I think everywhere else they're cutting rates. And for me, and I'm trying to be objective about this, but I saw that you know, right before, like in September, I'll just say this, September of 2024, um, he decides, okay, we need a aggressive rate cut. And then 2 months later, which happened to be, I think they had like a Fed FOMC meeting like the same week of the election. And then he goes, then the market starts soaring like right after the election. And he goes, oh, well, we don't need such aggressive rate cutting. And it's like, well, literally like a month before, in like late September, you just cut the rate. So what changed in 4 weeks? So I thought that was a little strange because the Fed's supposed to be an objective, apolitical institution. So I thought that was strange for one thing. And then the fact that he just won't cut at all. So here's something else I want to go on a rant about. I heard a Fox Business host talking about this, and this is all important because this is all the macroeconomics that make up ULTY, basically the eventual performance of ULTY. Some of it is based on macroeconomic indicators and output. Um, what does he say? Let me do some comments real quick here. I haven't put any videos yet thinking about it. There are already so many good channels out there. Oh, thank you. I appreciate that you say that because some people, I actually think when I was commenting on all the channels there are, some people tell me I suck. So I think sometimes I inspire other people, which in a way, I'm flattered in a way because if I inspire other people to become content creators and they're able to do it and get out of their jobs and stuff, then it's a win for the financial independence movement, right? LTC was mean to me. LTV, sorry, about 2 minutes behind you. Really, got to keep up. We move fast here. Anyway, back to macroeconomics. I know this is super boring and super dry, but I want to talk about tariffs as well. So tariffs, the media always said they're bad, they're this and that. But what I want to say, because it's been ingrained. So in my career, like as a student and even in the finance industry and all that, it's been ingrained like institutionally that tariffs are bad. And we're taught in school and stuff. You may remember the famous line from, Ferris Bueller when he's like, Bueller. Well, he's talking about the Hawley Smoot tariffs, which were like in the 1930s. And conventional wisdom, which sometimes when you dig deep, conventional wisdom isn't always so conventional after all. You will find sometimes the experts don't even know what they're talking about. But anyway, I will say this. Um, they blame. part of the Great Depression on tariffs that were done by Herbert Hoover when he was in office. But what they don't point out, they tell you the what, but they don't tell you the why. And I would venture to guess nobody really looks into the why. But I heard a Fox Business host say something very interesting this week. He said that when Herbert Hoover did the tariffs, they were like 60%. And another inconvenient truth the media doesn't tell us is that actually other countries have tariffs on us. And so they say that the United States should never ever like be mean to other countries or do anything to other countries. We should just basically, because we are the United States, we're supposed to just eat other countries' crap, basically. Um, but the way I see it, and I'm not saying one way or the other, I'm trying to be objective, but I would think like if other countries have tariffs on us for their goods, wouldn't we want to at least match those tariffs? And so far, that's all I've seen happen. I've just seen us, it's like 15% for 15%. It's nothing outrageous. And the first time that Trump did the tariffs, actually, the Biden administration kept a lot of the tariffs in place. So if they're so bad, why would a administration of basically the polar opposite political views, why would they keep the same tariffs if they're so bad? And so everybody freaked out like in March or April. They said, "Oh, tariffs are bad for the economy and this and that." But over a couple months, we got that case study we were looking for, and it turns out that the tariffs have not been so bad after all. And then people are still freaking out and stuff. But here's the thing, if you look at the last month or so, the Treasury had like a surplus for the first time, like the monthly. And I'm not talking about, again, debt versus deficit. Most people don't understand the difference. And politicians typically tee off on that because they'll tell you, oh, we cut deficits, but yet the national debt is like 37 trillion and increasing, which is a problem. But for the first time in however many years, the Treasury posted like a surplus, and some of that came from tariff revenue. So I look at it, if the United States is running like a business, um, the tariffs or matching tariffs to what other countries impose on us might not be such a bad idea. I've never truly subscribed to the idea that just because we're so great, we have to be so noble and just eat everything else from other countries. Like, I've never fully subscribed to that idea, but that's me kind of wading into my opinion, being a little bit controversial. So anyway, as far as macroeconomics, the point I was getting to is that while things look good overall, the point the point of that whole rant for the last several minutes is that the market, I think, is in great shape. I think the market, we're not going to have a bear market. I don't think so, but I think there are forces and there are people like Powell that I just don't know what they're doing. He wants to be a cog in the wheel for whatever reason. So, and his term, I think he's there till May. So, he seems like he's causing more harm than good. And then there are some macroeconomic things before we get back into ULTY's trades, which I'm going to end the video on. There are some things. Obviously, there was no market news today, but I use this site for market news. Um, so Monday, it looks like we're pretty much in the clear as far as any major news. So I think the market's going to recover. Tuesday, we have ISM services PMI. Wednesday, nothing in red, which is usually major. The British pound has some things. We've got more, so some unemployment, labor, and stuff, numbers like that. Um, so by next Friday, which is an exciting day for me, that means I can cash in on some of my NVDL puts that I've had to hold for like 30 days. Anyway, it looks like there's no major market headlines that are going to drive the market in a major direction for the foreseeable future. On the 12th, we have CPI and core CPI. I'm looking at the whole month of August here real quick. On the 14th, we got more numbers, retail sales. Other than that, I think we're pretty much in the clear as far as like major market driving news for the month of August for the United States. Let me go back to the 21st real quick. That's manufacturing data, unemployment claims. Let's see. US dollar. Okay, so yeah, the month of August, and then we got a GDP number and then more unemployment claims at the end of August. And then basically by September, we'll have our first Friday of September, we'll have our unemployment numbers again, which hopefully, because the unemployment rate, keep in mind, so that's Friday, September 5th. So keep in mind the unemployment rate is very good historically right now. We're at like 4.2%. We were 3.5, so we have ticked up. almost a full percentage point, but it's a very good number. So, and with the macroeconomic forces that we have at work right now, I think the economy is going to be very well. So I'm not going to be, as they say, I'm not going to be a panicking and sit here and say, oh, gloom and doom. I think things are looking great. So with that being said, I think Ulti will be fine. There's going to be some temporary pullbacks, but I believe most of us on here, and comment in the comment section. 'Cause I noticed you all got quiet during that last 10-minute rant, so you must all just be mesmerized by that cutting edge analysis there. Um, so I didn't see any comments, but comment away what you all think. Are you all, as dividend investors, are you all like long term? Are you in this for the long term, or are you looking for like short term? Because I know you want the dividends in short term, but are you in it for like long term? Is what I want to know. Because I'm in for long term. Like I'll hold Tesla till it goes to zero, basically. Like that one guy said earlier, he said, uh, you just hold until you basically the funds pay for themselves, then you're playing with the house's money. Well, I get that, but that hasn't happened for me on any of these yet. But then again, I'm only in a few of them. So because I'm a growth investor that likes high yield as well. I'm like, you could call me a hybrid. All right, so now let's go hybrid, but not hybrid, or maybe who knows? That could mean any sorts of thing. Okay, YieldMax website. We quite a while here. We're going to just go a couple more minutes. First, do a tech check here. Okay, good. For some reason, when I flip screens, now it's good. Once I look at the screen, it's good. Okay, so let's look at ULTY here real quick. It's what they call the Ultra ETF. So let's look at some trades if we can. Look at that. Oh, the distribution rate went up 4%, 89%, because I call that the dividend paradox. The fund price dropped. There's the dividend payouts and stuff. Here's the holdings. Here's the trades. Let's just go over these trades here. So we've got applied. We've got a call option August 8th. See, they expire next week. So that's a call $25, 23. So they've gone out. They've got multiple strikes open there. And then they've got puts on the same thing. So they're collecting on like both sides basically. Uh, Let me do this real quick. Let me see if I can just download these and then go over them verbally. So the top trades we looked at there, they've got a lot of them open. Um, this is kind of annoying here because I let my student Excel or Office, Microsoft Office, I let it expire. So I'm kind of being lazy here. So let me just do this because it opened in a text file basically. Let me share this tab. This is going to look ugly, but just bear with me. So the trades we have. Stephen Oler's ready to retire. So my dividends are set up like an annuity to pay my lifestyle. Annuities are tricky too. I'll do another video on that. Okay, so these are the trades basically. Basically, they're going out at several different strikes. Um, and they've got a lot of the SNCI, Hood, Upstart. They've got some, so they're harvesting a lot of premium. So it's good overall. Anyway, folks, that's going to do it for this one. Thank you all so much for tuning in. Please remember to like, comment, and subscribe. Smash that like button, join Discord. We will see you all in the next one. Take care. Have a great night. Bye.